Hey there, everyone. Today, we're diving into the world of currency markets and exploring a fascinating development in the euro to US dollar exchange rate. This topic might seem a bit niche, but trust me, there's a lot more to it than meets the eye. So, let's start with the basics. The euro, or euro, is currently trading strongly against the US dollar, or USD, and this strength is primarily due to some interesting dynamics in the US employment landscape. The US dollar index, which measures the greenback's value against other major currencies, has been on a downward trajectory, and this has given the euro an edge. Now, here's where it gets intriguing. The ADP, a leading payroll processor, recently reported a much lower than expected addition of payrolls in the private sector. This has raised some eyebrows and prompted a closer look at the US labor market. Investors are now eagerly awaiting the Nonfarm payrolls data, which is expected to provide a more comprehensive picture of employment trends. TD Securities, a prominent bank, has some interesting insights. They anticipate a slight improvement in July's jobs report but also acknowledge the risks of another downside surprise. This uncertainty is a key factor in the current market dynamics. The unemployment rate is also expected to remain stable, which further reinforces the idea of a balanced labor market. Shifting our focus to the Eurozone, investors are keeping a close eye on the upcoming retail sales data for June. This release will provide valuable insights into consumer spending and economic activity in the region. From a technical analysis perspective, the euro to US dollar pair is on an upward trajectory. It has broken above a key resistance level and is now trading above the 20-period exponential moving average. This suggests a strong buying sentiment and a constructive bias. However, there are potential pullbacks to consider, with support levels around the 20-period EMA. If the pair fails to hold this level, we could see a return to the July lows. Looking ahead, the euro to US dollar pair has the potential to extend its advance towards 1.1600 and beyond, with the May high at 1.1686 as a key target. Now, let's talk about the broader implications. The ADP employment change is a crucial indicator for the US economy. It measures the change in private sector employment, which has a direct impact on consumer spending and economic growth. A rise in this indicator traditionally signals a positive outlook for the USD, while a decline can be bearish. The correlation between the ADP report and the Nonfarm payrolls data is an interesting dynamic. Traders often use the ADP report as a precursor to the NFP release, as the two are highly correlated. However, it's important to note that individual months can see significant discrepancies. This adds an element of uncertainty and makes for an exciting trading environment. One key takeaway is the impact of employment figures on inflation and interest rates. Persistent growth in employment can lead to increased inflationary pressures, which in turn influences the Fed's decision-making on interest rates. This is a critical factor for traders and investors alike. In my opinion, the current situation highlights the intricate relationship between employment, inflation, and currency markets. It's a delicate balance, and any shift in these dynamics can have a significant impact on exchange rates. So, there you have it. A deep dive into the euro to US dollar exchange rate and its underlying factors. I hope this has given you a fresh perspective on the world of currency trading and the fascinating insights it can offer. Until next time, keep exploring and stay curious.